saying that they are not going to have any more economic talks, further talks with Australia. Okay, that was announced today. Also with the EU side, also with the US side. So you find that all these geopolitical events need not be war. No, a lot of people think conflict, military conflict. It does not necessarily be military conflict. It could be a diplomatic conflict. It could be an economical conflict, just like between China and Australia. Okay, because nowadays countries are becoming like small little children. They like to quarrel over small things. Okay, and then recently, what happened between Philippines and China? The foreign ministry, the secretary of the foreign ministry, right, foreign affairs for the Philippines started to use 4-letter words on China. Okay, so I don't know how many of you saw the news. And then the peace factors. Peace factors, P stands for political, E for economical, another E for environmental, S for social, and T for technology factors. Technology, of course, we know, right? Whenever there's a new technology breakthrough, certain things change. Okay? So these are, again, I say these short-term fundamentals are not exhaustive. Okay? They are not exhaustive. So please understand this. Okay. For those of you, if you want to join our Telegram channel, now please, because I realize a lot of people join, but they are not active. So if you join, you are not active, you myself don't join, seriously speaking. I'm not those who want a lot of people to join my Telegram channel. I want only people who are serious in learning. So despite the fact that I only want people who are serious in learning, usually 80% of those people who join, new ones, I'm talking about new ones, hardly participate in our learning activities. And they don't even bother to download the mobile app, which is free. So only if you are serious, you want to join our Telegram channel, you want to learn more, like I always say, learning how to trade, learning how to invest is a journey. Okay? You don't attend a course and then straight you know how to trade. Even until today, I'm still learning. Okay, there are 1,001 things to learn from the market because the market and the economy are evolving. Today, the market is so much different from the market 10 years ago. Even the economy is so much different, right? Nobody expect today, internet can do so many things. Nobody expect that we are going to 5G. And then 6G is already in the pipeline for China, just in case some of you do not know. And then you find that Cathie Wood, some of you may know Cathie Wood. She already came out with her latest ETF. The theme is based on space exploration. Can you imagine space exploration? No. So things are moving so fast until today and you don't even know. You think that social media is the new economy. Social media is already outdated already. It's considered the 4G already. Now people talking about space exploration. You're talking about 5G, the Internet of Things, smart devices and so forth. It's already going to move until look at it, it's like very old already. Okay, so things are moving so fast. You need to know what are the sectors to take advantage of, whenever certain fundamentals have changed. So please understand this. So if you want to join our Telegram group, what you need for Telegram channel, please, what you need to do is, this is my mobile number, 96771865. Save it under my name, Clarence Chi. And then you WhatsApp me your full name. Please, it must be full name. Okay, no full name, I will not reply or just be quiet. Please do it by tonight, 8:30 p.m. Okay, so save my name save my number under my name. WhatsApp me your full name. That's all. You don't need to tell me any other thing because I won't read them. Okay, then I will WhatsApp you instructions Okay, why I need your full name? Because I need to save your number, right? You WhatsApp me a message, I need to save that message under your full name. Yes, with full name, because I have a big community, so there could be people with the same name, right? So I need full name in order to differentiate you. Please do it by 8:30. After 8:30, I will not accept any more. Okay, additional notes. Please understand, one favorable fundamental can be an adverse fundamental for another market, industrial sector, or a particular stock, likewise vice versa, like I've said earlier on. If the resurgence of COVID-19 becomes very serious, you find that SIA may be a counter to shock. Comfort Delgro may be a counter to shock because government already say. See, the moment government, it was just a few weeks ago, the government announced, right? Employer need to let their employee go back to office to work for at least 3 days a week. So what happened to Comfort Delgro and SBS must start to move up? Then now with the resurgence, suddenly they say as far as possible, employer must allow the employee to work from home. What happened to the two stocks start to come down? Can you see? These are short-term fundamentals. Okay, so this is what I'm trying to tell you.
Short-term fundamental
So,
SIA
but then
可以买
because
的，
of this, what happened?
他讲 SIA
There
可以
could
买。
be certain healthcare stock start to go up, right? Isn't it? Certain healthcare stock. It may not necessarily be at SGX stocks because these two stocks, SBS Transit and Comfort Delgro, are SGX stocks. But certain stocks may start to move up. For example, stocks that, if I'm not wrong, in the US, I can't remember, Teladoc. Okay, Teladoc is basically is a healthcare stocks which they use the mobile app to diagnose you first before you go and see a doctor. Okay, so Teladoc may go up and so forth. So please understand, okay, it does not mean that adverse fundamental I short. It neither does it mean favorable fundamental I long. Because you must understand that one man's meat is another man's poison. Okay? COVID-19 resurgence can be an adverse fundamental to one particular counter, but it can also be a favorable counter. Sorry, be a favorable. Okay, so the same fundamental can be favorable for one stock as well as adverse for another stock. Okay, so please understand this. It doesn't mean that you need to understand the implication and the impact of this particular fundamental on the different sector, different market, and different thing, a particular stock. Okay? So now I use both fundamental and technical. I'm both. Okay, I'm a both, and I also use market sentiment. So what's the relationship between fundamentals and technical? We don't just base on fundamental, right? Because fundamental may only tell us a particular direction of the stock market, or a particular direction of a sector, or a particular direction of a group of stocks or certain stocks. Okay, so over here, can you see? Relationship between fundamentals and technical. Basically, you find that fundamentals determine why, what, and when. What does that mean? Fundamentals explain to us why is this stock moving up, what is pushing it up, and when did it start to go up. Usually when did it start to go up depends when was the news or the economic data released or announced or made available to the public, isn't it? So the moment Minister Lawrence Wong said, oh, as far as possible, employer must allow their employee to work from home. But the moment he said that, when did he say that? Last week, Friday or Thursday? So that's when Comfort Delgro or even SBS Transit start to come down. Because that was the time he said that. So when did he say that? Thursday. Example. Okay. So what is the factor that moved these two stocks down? The announcement by Lawrence Wong. Why? Because resurgence of COVID-19. See? So fundamentals answer the question why, what, and when. But technical determine how and where. How means what? How did the stock react? How did the price of the stock react? That is technical, isn't it? Because from the chart, you can see how did the price of Comfort Delgro, or how did the price of SBS Transit, or even how did the price of SIA reacted. SIA has finally dropped back below $5. Okay? And where is the price moving? That means the direction of the price. Is it moving up, sideways, down, or full of uncertainty? Don't know where is it going. Right? So technical will explain to us how did this stock react to the fundamental, and where is the direction of the price moving. Okay? So with the clear understanding of fundamentals and technical, you will have a better picture of a particular stock. Okay? Then you will be able to understand whether should you invest in this counter or should you only trade this counter. Right? How do you make that decision? Very simple. You need to understand whether this fundamental is it going to be a short term or long term. Short term or long term is basically whether is the impact going to be a long term effect or is it going to be a short term effect. Now I got to assume that all of you have traded stocks before, so that I don't need to go into some of the very basic stuff. Okay, so now we will do a bit of case studies. Okay, like I said, by the way, a lot of people think Zoom is going to recover. I don't think Zoom is going to recover for a very simple reason. You look at the news, Morgan Stanley, Goldman Sachs, they are already expecting their employee, their staff to go back to office to work. So you find that in the US, stocks depend on recovering, on the economic recovering, on the recovering from the pandemic are already starting to moving up. This is the reason why Dow Jones is outperforming Nasdaq, okay, in terms of percentage. Why? Because Dow Jones has a lot of traditional stocks, right? Traditional stocks means what? They tend to do well during the economic recovery. So this is part of cyclical stocks, okay? And they are mainly also value stocks. So traditional stocks tend to pay dividends. Okay, whether they are attractive or not is another thing, but they tend to pay dividends well. So these are value stocks. Growth stocks, mainly tech stocks, they don't really pay dividends. But I'm not saying that all growth stocks don't pay dividends. There are growth stocks that pay dividends, but mainly they don't. Okay? So if you understand all this, you will know what are the stocks to focus. Unfortunately, a lot of people tend to focus on tech stocks. Actually now it's not the time to focus on tech stocks. But unfortunately, a lot of people are still holding on to tech stocks with huge floating losses. So they fail to cut loss, and so they no choice but to continue hold on to them. And then what happens? Margin call, you top up. You buy time, so you top up. You buy time in exchange for opportunity cost. I'm not sure whether you realize, but if you have cut loss and then look for better stocks, I say better stocks means stocks that suit the cycle, the current stock market cycle, and stocks that suit the current market cycle and stocks that are trending upward, that is taking advantage of the economic recovery, of the vaccine rolling out. This is the reason I find that airline stocks, plus traveling stocks like Norwegian, all these stocks are recovering. Okay, they tend to outperform a lot of tech stocks, even like Tesla, even like Apple. If I'm not wrong, Tesla and Apple are almost flat. Year to date is almost flat. Because they go up and then they start to come down, so they gave up almost all their profits for this year. So a lot of time is wasted. This is the reason why, especially in trading, you need to have exit strategy. Okay, you need to know when to exit. When short-term fundamentals change, you need to exit. Okay, this is for traders. If you are trading, if you are investing, when long-term fundamentals change, or when you have hit your price target, you better get out. Okay, if you don't get out, you need to rebalance, shall I say. You need to rebalance your investing portfolio. Just likewise, you also need to rebalance your trading portfolio. So for those of you who have followed my stock picks, you will know that we have actually exited almost all, but not all, of our counters in SGX. Even though after exiting, you find that today it rebounded, right? Only the STI ETF rebounded. I think the rest, the tech stocks did not rebound. Franken, UMS did not really rebound. I think mostly flat. But the thing is, once we get out, you must not have any regret. Okay, then we look, because the moment you regret what happened, you tend to become very biased. You tend to become very confused. You will not be able to look at the market with a clean slate of mind. Then you cannot choose what are the stocks to look at. To start to scoop up some stocks to refill up your portfolio. Okay, so this is something very important. So case studies, very simple. If you are still holding on to US tech stocks, especially those listed in Nasdaq, you find that every time the yield go up, your stocks is going to come down. So that's why Nasdaq has been extremely very volatile. Now, if you look at China market, okay, so if you are holding a lot of big shares, all these or China shares, you find that China shares has been coming down. I foresee it may even come down because now they have a geopolitical, they have a diplomatic conflict with so many countries in China. Plus the fact that one characteristic about China is that each time when the PMI, the Purchasing Managers Index comes out favorable, the stock market tend to come down. Okay, because for China, good news, good economic news is bad news for the market. Why? Because good news for the economy means what? It's giving a good reason for the People's Bank of China to have a rate hike. Because the economy is recovering. So why should the interest rate remain low? So I will start to move the interest rate upward. I may even start to tighten up the reserve ratio requirement of the banks. Right? So that the banks will not be allowed to have more cash to disperse out as loan. That means they will start to tighten up the liquidity in the market, which is bad news for the market. Okay, because China is very sensitive to debt. China debt level is rising up very high. So they want to reduce the debt, but they need a reason, right? They will only start to reduce the debt or the liquidity when the economy starts to show signs of recovery. So the moment they reduce the liquidity, that is bad for the market. In fact, last week, People's Bank of China released a very interesting statement. Margin trading is considered illegal. Okay? Margin trading for stocks is considered illegal now. So this is going to cause the liquidity to slowly dry up. If you have read today's market update on China, you will know that for the month of March and April, liquidity, okay, got to pardon me, my cat. the liquidity has been slowly drying up for the stock market. So these are what? Is it long-term fundamental or short-term fundamental? Very hard to decide. Okay, this one very hard to decide because the market will take usually this kind of incident the market will take quite some time to come to an equilibrium. But right now, all stock market except Singapore stock market are hungry for liquidity. So the moment the liquidity is stopped, leverage is cut off, what happened to the stock market is going to have a very steep correction. Okay? So why would central bank want to cut off liquidity and reduce leverage? Global economy is recovering. Right? So this is the thing which I posted in the Telegram channel, which I will elaborate more this Saturday. Is it possible to have a bear market in the midst of a global economic recovery? Looks like it's very possible. But again, this bear market could be a very short one, just like last year bear market, right? That started in February and ended end of March. Okay, that is the shortest bear market in the history of the stock market, right? So is it possible to have another bear market in the midst of a global economic recovery? Last year bear market is because of the pandemic, right? It's very possible that the next bear market may be caused by the global economic recovery itself. Okay, why is there a need to cut off liquidity and reduce leverage? Inflation. Everybody is so afraid of inflation. So for those of you who have received my report on whether is inflation transitory or not, please go and read. Don't just take the report and then leave it in your laptop folder. Read it, and then you will whether you agree with the report or not, because the report is actually showing that prices of raw components, material is actually rising, which will in turn cause the price of finished goods to go up. And then very soon, what will happen? The workers, the men on the street in the US will start to feel the prices is going up. They will start to ask for increase in wages. If the wage is increased, what will happen? Inflationary again. Don't forget, Joe Biden is going. He has proposed the minimum wage to be increased from, I can't remember, is it from $12 to $16 per hour? Okay, but then he decided not to include inside the stimulus pack, but he's going to bring it up again. Okay, so in the event that is passed, so minimum wage becomes $16 per hour, it's going to be inflationary, isn't it? Because labor cost is going to go up. This is the reason why, to me, I think inflation is not going to be transitory. That's why Janet Yellen is very concerned. But Janet Yellen, now she's no longer the Fed chairwoman, she's the Treasury Secretary, so she must respect the independence of the Federal Reserve, which Donald Trump did not respect. Donald Trump always hit at Jerome Powell. So she realized that what she said could have been misconstrued. So she decided to make it very clear. She is not dictating the direction of the interest rate. Right? She clarified that. But I think the fact that she brought it up means what she's actually very concerned, because the debt level of the US federal government is rising, and that is actually very inflationary. Reason is because they're giving so much money out, so it's going to be inflationary. It's going to boost a lot of demand for goods and services. Okay, so this is something that you need to know and understand. So as far as for case studies, let's say the resurgence start to die down in Singapore. Traveling bubbles start to establish successfully. You find that SIA will definitely start to go up, isn't it? Okay, so SIA will start to go up. You find that maybe certain healthcare stocks may start to come down. Why? Because rebalancing again. traders and investors will start to rebalance their portfolio. They will take profit on the healthcare stocks and then move into transportation, isn't it? As more people go to work. Now stocks like restaurant, now you better throw away, right? Jumbo is having losses. Instead of announcing earning guidance or guidance for earning, they actually announce a loss guidance. So Jumbo is having a big loss. So you shouldn't be keeping hospitality, F&B counters, right, during a resurgence. But once the border starts to open up, tourism start to be reinstated, then you should know what stocks to look at, isn't it? So these are considered short-term fundamentals. Okay, once again, a reminder, those of you who want to join our Telegram channel. Okay, I will still have another talk on the same topic, which is 2 weeks later on a Tuesday. I will do more case studies. Okay, I'll do more case studies. So those of you, a gentle reminder for those who wish to join my Telegram channel, please save my number under my name. WhatsApp me your full name by tonight 8:30 p.m. Okay, I always have this question. How about gold and crypto? Gold is already moving up. Okay, why? Because inflation. You see, the market doesn't believe that inflation is transitory. While the market may believe to a certain extent that the Federal Reserve will keep interest rate low. Why? Because their target is to ensure full employment. You see, the Federal Reserve has two targets. Their mandate consists of two targets. One is what? Full employment. Doesn't mean 100%. Full employment, I do not know what's the definition for full employment. Okay? Full employment plus inflation target, 2% based on PCE. Okay? So tomorrow evening, 8:30 p.m., non-farm payroll. Right? Non-farm payroll, you should know what it is. It's a job data. How much of non-farm jobs will be created. If the job market is too good tomorrow, that may mean bad news for the stock market. I say may, I only say may. Why? Because that means the Federal Reserve is getting close to their target, isn't it? Okay, that means if tomorrow the job data is too good, it exceeded their forecast, exceeded their estimate, that means they are getting very close to their full employment. That means it may be time to taper the what? Remember, before they have a rate hike, they need to do the tapering of the QE, isn't it? They will start to taper the QE, and this is not good for the stock market. The stock market will have an initial reaction of its sold off. Okay? Plus, interest rate is going to remain low. If Jerome Powell is going to say that interest rate remain low. See, now interest rate is between 0.2 to 0.25%, the Fed fund rate. Even if he increase it to 0.25 to 0.5%, but inflation is what? 2%. Which means what? It's insufficient. An interest rate of up to 0.5% is insufficient to hedge against an inflation of 2%. Which means what? Gold need to go up to hedge against an inflation at a low interest rate environment. Okay, so gold is slowly creeping up. It's slowly creeping up, slowly, because it's only about half the market don't believe Jerome Powell. Okay, crypto, Ethereum has hit a record high. Okay, so you may want to look at Ethereum rather than Bitcoin. But again, I do not know. So sometimes you may want to switch between Bitcoin and Ethereum. Now they got another one, Dogecoin, right? Dogecoin. So there are many kind of coins. You want to look at. Okay. So now we have a Q&A. Okay. So you have any questions to ask me? But please keep your question relevant to the topic. Okay. Please keep the question relevant to your topic. Don't ask me things that is out of the topic. So what is our topic? Sorry, our topic should be short-term, long-term fundamental versus short-term fundamental. My Q&A slide, the theme there is actually the I did not. Yeah, this should be the correct one. Okay.
All right. Thank you, Clarence. Okay, so while we wait for the audience to write FAQ questions, let me quickly go through what we CGSCI and BCFT team can offer you. Let me just quickly share the screen. So as many of you are already aware, we are the largest DMA CFD provider in Singapore, with the deep understanding and confidence of the market movement, of the current market movement you perhaps learned from Clarence tonight. You may want to consider using CFD product to leverage yourself to potentially increase the exposure in the market. Right? These are the little features that we offer. The DMA, the difference between DMA and the market maker, which is usually the thing that other brokers provide. And also, I am very happy to share that we are actually having a promotion of 0.07% commission. I'm not very sure if you guys are well aware of the current market rates, but 0.07% is actually the lowest commission that you can find in trading CFD. Okay. So if you're interested to open CFD account with us, please find the account opening. Okay, this is our CFD website. As you can see, we have the little promotion advertisement over there. And on the right hand side, there's account opening tab. So if you click it, you can see the online form. Please submit the online form and let us know that you have submitted it via email so that we can service you with a better efficiency. And when your account is ready and opened, you will be able to start trading immediately upon funding. And how do you fund? Kindly take when you do a funding, kindly take a screenshot of the proof of payment with your account number and email to us so we can update your portfolio accordingly. You can find the methods to fund under Getting Started, right there that I'm having here, and click account. So this is the method to fund to us. So you can either pay now us or fund the transfer using FAST, and fundings in other currency can be done in a SSI form over here. So we can accept all the different currencies that you would like to have, SGD, AUD, so on and so forth. Okay, for existing clients, please take note that we have now a new feature to reset your password, which is done by a 2FA Google Authenticator. You may refer to the user guide, which is right here as well, 2FA, found on the website, to link the Google Authenticator. So you can reset your password. Okay, if you'd like to learn more about CFD, we have a training platform and resetting password training bi-weekly, so you can join us at the same time. All right, I think we are more or less ready with the Q&A. Okay. So very first question will be, what's your outlook on US tech stock?
Okay, my outlook, I think if you are in the Telegram channel, you should know what is my outlook for the US tech stocks. Right? I've been asking you guys to reduce, first of all, I asked you guys to reduce your exposure in the US tech stocks. And then today, I asked you all to have zero exposure to the US tech stock. So that should tell you what is my, right? If you are in my Telegram channel, please read all my posting in the channel, please. Right now, the Nasdaq is off its day high, it's coming back down again. I'm not surprised today Nasdaq is going to close lower. Okay, those of you who are in my index stock index channel will know that the Nasdaq 100 has formed a double top. Let me check the chart. It has formed a double top. See whether has it broken the neckline. Yes, it has already broken the neckline. In fact, it has broken the neckline on Tuesday. The double top of the neckline on the day chart on Tuesday currently is testing our 61 EMA. Today, it has come down right off from the day intraday top and is coming to test the day low. So I'm not surprised today Nasdaq is going to go down again, and if today it closed right below my 61 EMA, I can tell you the next support will be the 23.6% Fibonacci. That's why I've been telling you, I've been asking you guys, reduce your exposure in the US tech stock. And so please, I have my reason to reduce, to ask you guys to reduce. It's going to come down. Okay? It's going to come down, and you look at the S&P also off the day high by a lot. Okay? So I'm telling you, it's bad. In fact, just now I already told you guys, like Dow Jones has outperformed Nasdaq this year for a very simple reason. If the market is focusing on economic recovery, so you find that all those stocks counters that are able to benefit from the economic recovery, I'm talking about the US market, are the one that is strong. Okay, are the one that is firm. All those tech stocks, I think they are going to go down some more. Don't be surprised Apple is going to go down further. Tesla is going to go down further. Especially Tesla, because Tesla is going to face a lot of competition from the EVs in China. Okay?
So now that you mentioned China, what about China tech stocks?
For a very simple reason, if you have been reading my daily market update posted in my TT Global app, you will know that China tech stocks is also bad. Reason? Regulators. Xi Jinping is regulating all the China tech stocks. Reason? You see, Ant Financial cannot go listing anymore. Forget about Ant Financial. Reason is, it's not about conspiracy theory. It's about, unfortunately, you see all these China tech stocks. I'm not talking about the recent ones. I'm talking about those that have been listed for quite a number of years. They were all listed before Xi Jinping's time. So who benefited from all this listing? So if you understand China politics, you will know that Jiang Zemin and his gang, his family, all benefited. And Xi Jinping is actually doesn't belong to Jiang Zemin's gang. So he wants, what he's doing, he wants to regulate all these tech stocks because he doesn't want Jiang Zemin and his family to continue to benefit from all this. So it's very political. It's very a lot. Even Jack Ma also belongs to Jiang Zemin's gang. That's why he cut out all the shit. Okay, so to me, tech stock era, I won't say tech stock era, but tech stock currently is facing a lot of downward pressure. Okay, it's facing a lot of downward pressure until for US stocks, until the interest rate, until the inflation plus the interest rate is more stable, then I will see a recovery. Currently, I don't see the fundamentals favor any tech stocks for both China and US. You can see that even if there is a semiconductor shortage, what happened to all the semiconductor stocks? All dropping. Reason is very simple, because that means Q1 coming to Q2, they are not able to produce sufficient semiconductors. If they cannot produce sufficient semiconductors, what will happen? That means their earnings, their revenue and earnings for Q2 will not be good at all. And what are the sectors that need all these microchips? The EVs, the electric vehicles, the telcos, right? So Apple, all this will be will be impacted because there's a shortage of chips. So the electric vehicle counters will also, their manufacturing, their production will also be disrupted because of insufficient of microchips. So what do you think about their earnings for Q2? I hope you guys understand what am I trying to say. So that means their earnings will be impacted by the shortage of what? Microchips. So now they're having a big problem now. This is the reason why I've been asking you guys every day without fail, read my daily market update. Then you will know what is happening. Why am I able to answer you all these questions? Not because I'm very smart, not because God gave me the revelation, but because I read. So whatever I read, I share with you guys either in the Telegram channel or in the GT Global mobile app. So if you read, you will know. Okay, so learning always takes place. Okay, next question.
So does it mean we should avoid China market at the moment?
Of course. If you look at Shanghai Composite, if you have been, every week, right, Saturday, I post the daily, the weekly technical outlook. You just look at the Shanghai Composite Index. It's coming now. It's off the high. Okay, it's off the high. It's off this year's high. In fact, it's off the record high. Record high for Shanghai Composite Index is 6,000. Currently, it's 3,000. Okay, so should you avoid? Yes, of course, you should avoid. Remember just now I told you, every time when there's a good PMI, what happened? Purchasing Managers Index, whenever there's a good PMI, how did the market react? The market doesn't react by going up, no, the market actually react by going down. Because a good PMI means China economy is recovering. That means it's time for the central bank to reduce leverage, increase interest rate. Is that good for the market? No, the market. It's bad for the market. Okay, any rate hike is bad for the market because global stock market is on steroid, which is the liquidity. If last year the central bank did not have a coordinated effort to pump liquidity to the market would have collapsed. So now the central bank is slowly withdrawing the steroid. So the market will need time to digest, need time to accept the reality. But unfortunately, the market is finding it difficult to accept the reality. This is the reason why I said just now, right? Is it possible to have a bear market in the midst of an economic recovery? My answer is yes. So prepare for a bear market, lah. I'm telling you now, prepare for a bear market in the midst of a global economic recovery. But bear in mind that likewise, the bear market last year was only 2 months. Likewise, in the event that there is a bear market in the midst of a global economic recovery, this bear market will likely to be as long as 2 months only. Okay, which is a good thing because that's why you can scoop up all the good shares again, right? You need a market crash for you to pick up, to do proper bargain hunting and to rebalance your entire portfolio. Okay, so market crash is an opportunity. You will love it, I tell you. Imagine Apple crash until $50. Example only, example. Then SIA crash until below $4. Will you buy? Of course. SIA is guaranteed by the government. So you will love this bear market. I tell you, this coming bear market, you will love it because it will give you a lot of opportunity. But please clean up your portfolio. Like I said, please reduce your tech stock exposure. Okay, next question.
Okay, so China is a no-go. What about Hong Kong market?
Hong Kong is part of China.
Okay, so Hong Kong is a no-go too. All right, so
How about
what's the
SGX?
Sure. Is it worth it? SGX?
SGX is good. I always telling you. Last month, remember, I told you guys STI is the number two performing stock index in the world. Number 1 is Taiwan. Taiwan Taiwan, besides having a geopolitical issue with China, it managed to contain the COVID-19 very well. And the TAIEX index outperformed all other global stock index. China, it outperformed China. By the way, Shanghai Composite Index, I can't remember. I think some of the China index, Shenzhen, all these, CSI 300, some of them have already gone negative year to date. Okay, I see Hang Seng may go into negative as well. Okay, because a lot of capital is flowing out from Hong Kong. And surprisingly, STI is the number 2 performing stock index in the world. It outperformed Kospi, it outperformed Nikkei, it outperformed European stock index, and it even outperformed Nasdaq, Dow Jones, and S&P 500. Can you imagine that's STI? Just in case you didn't know, you should be proud of STI. Come on.
That's awesome. Since now we have 0.07 commission, maybe people can try that. Right. So what's the outlook for global ESG, clean energy, and Singapore industrial and commercial rates?
Okay, it's very good. Anything to do with renewable energy is good. Okay, that's why you see BP, British Petroleum has already moved out of crude oil. In fact, they are moving into, they're going to do battery charging station, all this renewable energy. Definitely renewable energy is good. Anything to do with Internet of Things is good. It's just that you need to be very careful of market sentiment. Because when the market sentiment turns sour, a good stock can also be adversely impacted. So be very careful of market sentiment. So even when you want to scoop up a good stock with strong long-term fundamental, please look at the chart. Because technical can tell you now is not the time to buy. Remember what I told you about technical? Technical will show you where the price is moving. If the price is plunging down, do you buy? No, you don't buy. If SIA break below $4, does that mean you buy? No, because who knows, it can go down to $2. Right? So look at the chart. So there are times, that's why you need to be both a fundamentalist and a technicalist. Okay, both fundamental and technical will help you to determine whether is it the time to buy or not, because both will answer you the question of what, why, when, how, right? Okay, so you need to know both. This is the reason why learning how to pick, whether you want to learn how to trade stocks or invest in stocks, you must take the whole thing very seriously, and learning is a journey. This is the reason why I only want people who are prepared to learn and participate in our learning activities in our Telegram channel and in our Zoom session. Otherwise, a lot of people just join the Telegram channel and they become inactive. You will benefit zero. You will benefit zero from me. Okay, next question.
Alright, so short-term fundamental is resurgence of COVID cases, even in Singapore. Any comment on the growth counter in Singapore market going down instead of up?
Okay, that's a very good question because I was also expecting it to go up. Currently, we are holding, or at least I am holding UG Healthcare. I hold UG Healthcare not only because of fundamental, but because of technical as well. It broke above my resistance. Only then I went in to buy. Unfortunately, after I went in to buy, it came down. Okay, so I just leave it there because I have a stop loss. So this is what trading is all about. Okay, doesn't mean that you take into consideration fundamental and technical is sure win. There's no such thing as sure win. That's why you always need to place a stop loss. Okay, so I understand. No, recently, glove stocks, even MacTech International also came down. Okay, I'm surprised. I'm actually surprised. But for what? But you just need to move on, right? And just respect your stop loss. If you find that you are not able to take the stop loss, then you might as well exit, right? Because you can't take the risk. Okay? For me, my stop loss is there. I will just leave it there. Okay, I am I am long UG Healthcare, but I don't think I want to look at Top. Okay, even among, let's say, Riverstone or Top Glove. Top Glove has a lot of labor issues. Although they seem to have resolved all these labor issues, right? But I still prefer UG Healthcare or Riverstone. So for Malaysia, they may want to look at Hatta. Because Hatta, I think recently in the analyst rating published in TT Global, Hatta has I can't remember, 4 or 6 analysts giving them favorable ratings. Okay? So you need to, yeah.
Okay,
Any other
and
question?
actually, relating to that, I have a question. So, do you think it's too late to enter any health sector investment?
I won't know whether is it too late because first of all I need to see the chart, and then I need to see the margin of safety, right? That means from now until the target price by the analyst, what is the percentage I have? Because if the upside is not much, then I'm not going to go in. You know, I don't believe in chasing after prices. Okay, so sometimes you must learn to wait for a correction. Okay, if the price have gone up too high, learn to wait for a correction before you go in. Otherwise, you see, if you join my Telegram group, I will give you a lot of information to guide you. You attend my tutorial session like this coming Saturday, Zoom, which is free. I open to everybody as long as you meet the terms and conditions. You don't have to pay me a single cent. That's why you get to learn, isn't it? So if you keep on asking me for tips, I can give you tips now, but I cannot give you tips forever. So it's always good to learn so that you can give tips even to other people, isn't it? Okay, next question.
Okay, would you agree that when short and long-term fundamental news hit the mass media, it is too late for retail investor? How
No.
can we circumvent this
No.
situation?
It's never too late.
I see.
You see, I tell you why it's never too late. Because the market tends to overreact. Okay? Sometimes after one day, the market reaches equilibrium. That's where things become clearer. You can go in. Okay? Always remember, market always tend to overreact on the first day when the news is out. Now, please understand, fundamental does not mean it has to be news. For example, resurgence. Right? Notice something about SIA. SIA, even after with the resurgence of COVID-19 in Singapore, it actually still went up some of the days. You actually give in, if you are those people who like to short, you can actually short SIA. It actually still go up, no? And it was around $5.20 even during the resurgence time. Now can you see it has dropped below $5? So there is still time for you to react. Don't jump the gun. The problem is a lot of people, no, the news come out, I must go in. Then when you go in, you get hit by the volatility. Why do you get hit by the volatility? Because the market tend to overreact. The market also need time to digest the news. There is no such thing as you are late. There is news but it's always not a good habit for you to jump in without analyzing, without assessing the situation. Okay, usually people who jump in will commit suicide. Okay, so please take your time.
Oh my god. I hope no one does that. Okay, so what do you
They
think
may do it because of the 0.07%.
Oh no! Guys, please trade responsibly. Okay, what is your view on semi stocks? Can they recover because there's still a chip shortage?
Remember I just said, you asked, okay, you guys, you must listen to what I just told you. Chip shortage. That means all the semiconductor stocks, they are not able to produce sufficient stocks, which means that Q1 earning may not be good, Q2 earning may not be good because they are not able to produce. Now why? Okay, because their supply chain was actually disrupted by the COVID-19 last year. So it will take time for them before they can recover back to normal production. Okay? So you see, I was also caught in this situation. That's why I went in. That's why I remember I went to long Nvidia. I long Nvidia because I thought there was supposed to be a shortage of stock of microchips, which may lead to an increase in price of microchips. But actually, it's not. You see, when you trade stocks, you must think like a businessman. Currently, because everybody is not able to produce sufficient microchip. When you are not able to produce sufficient microchip, let me ask you, your revenue for Q2 will it be good? Your revenue for Q1 may not even be good compared to 1 year ago. Isn't it? Because shortage. Shortage means you are not able to produce sufficient. Isn't it? So it will definitely hit your bottom line, right? Because your numbers are bad. Right? Your production is disrupted. That's why you're not able to produce enough. So do you think your earnings for this quarter will be good compared to last year? No, it will be bad as well. Isn't it? So it doesn't mean that shortage is good. Shortage is bad. It's like Sheng Siong. If Sheng Siong only sell toilet roll and now they have shortage of toilet roll, let me ask you, what do you think of the sales for toilet roll for the month of May? Will it be good? It will be bad because they got not much toilet roll to sell. Isn't it? And that in the end hit the bottom line of the EV because the electric vehicles are not able to produce because they are facing shortage of microchips. They need it's not just EV. If you are buying Continental cars, you see Continental cars also use a lot of microchip because they got a lot of electronic. They got a lot of electronic stuff, unlike Japanese cars. So even normal cars may also get hit by the production numbers. Okay? So sometimes need to think like a businessman. Okay, next.
Okay. So in a view of Biden's latest comments, what are your views on the pharmaceutical and vaccines companies? Will they continue to slide in the middle of the time frame?
Okay, like I say, market tend to overreact. Today, China pharmaceutical stocks came down because of what Joe Biden did. Okay, he said that no patent. He's prepared to let the India to manufacture their own vaccine. Okay, just take the formula from the US, whether it's from Pfizer, Moderna, J&J, I don't know. I hope they are not taking for AstraZeneca, So there is not going to be any patent, which means that this is the one reason why China pharmaceutical stocks fell. Okay, unless the China pharmaceutical stocks are able to say, oh, we actually don't need the India market. The China market is sufficient, is more than enough for us. If they have this kind of announcement, you find that what happened, the pharmaceutical stocks in China will start to recover. Okay, so now nobody knows because, like I say, market tend to overreact. You need to give some time for the market to come to an equilibrium. When I say market, I'm referring to the pharmaceutical stock. They will need to come to an equilibrium before they decide what to do next. So what they need, how are they going to decide to do next may depend on what J&J, Moderna, and Pfizer, are they going to make any announcement? If they are very supportive of Joe Biden, they say, oh, never mind. It's okay. It's for the sake of global healthcare. That may become a positive thing because PR, public relations, which means that they may say, oh, this one won't, this patent, lifting of patent does not impact our earnings projection. If they say this kind of thing, then what will happen? The pharmaceutical stocks may start to recover, isn't it? So you need to look at all this. Whether did the company make any announcement, you know? I'm sure the company will react with some announcement. Oh, we are supporting what Joe Biden say. Anyway, this will not impact our earnings. That's why you need to see their guidance, their earning guidance. Is it still positive? Is it still good? Is it still very bright? You know? So if the earning guidance is still good, then the stock may recover. Okay. So remember, just now earnings and earnings guidance is also one of the fundamentals, isn't it? Okay. Okay. Next.
Okay. Does Bitcoin-related stock like Coin, Mara, and etc. in the US considered as tech stock?
Come again, sorry.
The Bitcoin-related stock, Coin, Mara, and etc. in the US considered as a tech stock? Cryptocurrency.
I won't consider them as tech stocks. You know. But okay, now if you talk about coins, there is a lot of issues. Okay, there's a lot of issues now because there's supposed to be a crypto ETF, but I think it's not been approved by Security Exchange Commission. Okay, so like PayPal has Bitcoin for exchange, Tesla has Bitcoin, but recently Bitcoin is not doing as well as Ethereum. So honestly speaking, I'm very careful about all these crypto. It has nothing to do with my own personal prospect of crypto, but it's just that it's still a very controversial thing. Be very careful when Bitcoin crash. When I say crash, mean go down by more than 10%, 20%, because it will definitely impact Tesla. Even though Tesla has only maybe 1/B worth of Bitcoin in their balance sheet, but sentiment, because market tend to overreact. So adverse sentiment may come out when the Bitcoin start to have a steep correction, and it may cause Tesla. People will start to sell off Tesla, right? Because Tesla has 1/B worth of Bitcoin in their balance sheet. Even though it's not much compared to the entire market of Bitcoin, but you know, market tend to overreact. So you need to be very careful. I'm telling you this. See, my cat is making noise because my cat is a big investor in Catcoin. Okay, any question? One last question, please.
Alright, I can do. What is your view on AEM?
AEM, Singapore AEM, is it?
Yep, that's right. Singapore AEM.
Okay, yes, recently dropped revenue. I think the earnings was not as good as last year. Last year was super good. I'm still holding AEM, just for your knowledge. Just for info, I'm still holding AEM for investing. Because if you have been reading what I posted in TT Global mobile app, you will know that AEM, analyst rating for AEM is still a buy. Released just this week by DBS, and if I'm not wrong, the other one is CGS CIMB. AEM is still a buy, but the target may not be as high as previously. Okay, I'm still holding on to AEM as for investing, not for trading. For trading, Franken and UMS I already exited already. Okay, Franken and UMS I exited yesterday. Yesterday I cleaned up all my SGX portfolio. So I'm actually looking, because I think SGX stocks may have still some downside. Okay, because you can see that today reported total 10 cluster of COVID-19 is in Singapore. You know. Okay, we have one more last question, then we call it a day.
Okay, so this is regarding your own Telegram and Zoom session. Can you post your report to the Telegram group?
All information is in the Telegram.
So he's
Okay,
asking
plus in the TT Global mobile app.
Oh yes, okay.
Yes.
So okay, that's fine. Can still register for your Zoom session tomorrow?
No, it's already closed.
I see.
Don't worry, we have more.
Okay.
It depends on my mood also. My mood is determined by the market sentiment. So if I lost money big time, you won't see me. I will conduct less Zoom session.
I hope it's making.
So you pray that the market will be kind to me, show some mercy to me.
Okay. That was the end of the question that we have for tonight. I think we can call it a day for today.
Good. Thank you.
Thank you, Gladys.
Okay. Thank you, everybody. Okay. Good night.
Good night.